Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at some financial results of two companies or two groups that may be near and dear to most of us. We're talking, of course, about Prestige Holdings Limited as well as Agostini Limited. Now, there would have been some contrast in terms of reported earnings, but that might be on the face of it. Let's take a look at how both of these groups would have performed and what investors might expect in the coming months ahead. Turning firstly to Prestige Holdings for its fiscal year ended 2023, the group reported diluted earnings per share of 90 cents, which was a whopping 58% increase odd from the 57 cents per share recorded in that prior comparable period of fiscal 2022. Now, when we take a look at some of the drivers of this performance, group revenues were up 20.3% from $1.1 billion to just over $1.3 billion. Operating profits advanced 40% from $72.5 million to just under $102 million, and overall profits attributable to owners increased from $35.5 million to $56 million for the fiscal year 2023. So certainly good reading for Prestige Holdings Limited shareholders or investors. Now, when we take a look at that revenue story, of course, fiscal 2021 and 2022 partially would have been impacted by COVID restrictions, and we can see that there was a very nice recovery, of course, driven by increasing new store openings as well as some price increases, as has been making the rounds in the media recently. Of course, fiscal 2023 revenue increased to just over $1.3 billion, a 20% increase year over year from that fiscal 2022 period. Now, from a margins or operating perspective, PHL continues to do reasonably well. Now, it's been maintaining its gross profit margins at around that, just under that 33% level in green, which is pretty standard in terms of its historical levels, with that operating profit margin in pink increasing from 6.6% in fiscal 2022 to 7.7%, and profit before tax margin improving from 4.9% to 6.3%. How do we interpret that? Well, in terms of every dollar of revenue generated, the group is being able to, or has been able to generate or translate more and more of that into profit before tax for shareholders. Now, in terms of valuations for investors, when we take a look at the basic earnings per share for fiscal 2023 at 91 cents compared to the price, we can see that Prestige Holdings is trading at a still quite reasonable price to earnings ratio of 11.3 times, meaning investors are paying a reasonably attractive valuation relative to historic levels pre-COVID, of course, for every dollar of earnings that the group is generating. So with or at a price of $10.32, Prestige Holdings Limited or PHL is trading at that price earnings ratio of 11.5 times as mentioned, which is considerably below the sector average of 16.1 times and offers investors a quite healthy dividend yield of 4.4% compared to the sector average of 3.5%. So with that ongoing revenue growth in mind, those higher margin trends are looking very promising for investors. Continued new restaurant openings, particularly in what one would assume would be higher margin restaurants such as Starbucks, and those relatively attractive valuations, Bourse is maintaining or assigning rather an overweight rating on PHL for the time being. Turning very quickly to Agostini Limited. Well, for its first quarter of fiscal 2024, the group recorded an earnings per share of $1, a 67% decline from the $3.01 recorded in that prior comparable period of the first quarter of 2023. Now, take that with a pinch of salt, of course, because there was a very significant one-off non-cash gain, which would have occurred in fiscal 2023, adjusted, of course, according to the group, the earnings per share figure for the comparable period of 2023 would have been about 96 cents. So roughly a 4 to 5% improvement on adjusted earnings with that $1 that was generated in the first quarter of 2024. Looking at some of the revenue trends, we can see that revenues were up 6.8% from $1.27 billion to just about $1.36 billion. Operating profits increased 3.7% from $155 million to just under or just around $161 odd million. Of course, with the non-recurrence of that extraordinary gain, which took place in 2023 versus 2024, net profit attributable to equity holders slipped to that $69.3 million. When we take a look at AGL, so Agostini's profit before tax by segment, can see some modest improvement. Fast-moving consumer goods in that red segment increased around 4.5% from $98 million to $94 million in profit before tax, a 2% odd increase in pharma and healthcare, that pharma and healthcare segment from 46 to 47 million. And of course, in that energy, industrial, and holding segment, that one-off gain would be quite quite evident in the first quarter of 2023 with 148 million. In 2024, first quarter fiscal 2024, energy, industrial, and holdings segment contributing just about $5 million to profit before taxes. So, of course, we expect to see some further normalization in terms of performance for Agostini's as we go forward, which should help with some comparability for investors. From a margins perspective, Agostini's operating profit margin declined just moderately from 12.2% rather in that red column of 2023 to 11.8%. Of course, the profit before tax margin would have been skewed by that one-off gain, falling from 22.3% to 10.7%. But when we take a look at the operating profit margin, we can see a pretty decent upward trend and some stabilization at around that 12% figure, which is good news for investors. Stable margins always help in terms of predictability and forecasting for investors in terms of whether they make that decision to invest or not. From a valuation perspective, again, because of that reported earnings figure coming down from $4.89 in the first quarter of 2023 to $3.30 with no commensurate adjustment in share price, that price earnings ratio has advanced to about 20.7, just around 20.7 times, again, meaning that investors are on a historical basis paying more per dollar of earnings generated by Agostini's relative to historical trends. So at that price of $68.27, again, Agostini's is trading at a price earnings ratio of 20.7 times, above the sector average of 16.1 times, and offers currently investors a dividend yield of 2.2% compared to that sector average of 3.5%. So with revenue growth in mind, the group would have noted that one of its key objectives for fiscal 2024 is the acquisition, integration, and extracting all of those synergies from its recent acquisitions. But of course, looking at those relatively elevated valuations, Bourse is going to maintain a market weight rating on Agostini's for the time being. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773, email us at invest@boursefinancial.com. And of course, you can check out our website where all of our research is absolutely free at bourseinvestment.com, and catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. Stay safe, happy investing, and we'll see you next time on the Bourse Report.